what is possible.
The Times of London is reporting this morning that the Financial Services Authority will soon pull together a team of outside advisors to deal with a possible wave of corporate crises in the insurance sector. The article said that the regulator, along with government departments, are looking at a range of options to assist insurers, which would include relaxing rules on accounting and capital requirements. This week, the FSA appointed an external team of lawyers following presentations by about 10 law firms 2 weeks ago. According to the article, sources close to the process have said that the FSA was trying to ready itself for a surge in restructuring or failures among financial services companies. The appointment process is thought to have been going on since January. One lawyer involved in the presentation said that they had centered on insurance sector failures. A source said, quote, "This thing has developed a life of its own. It's all about ensuring that the FSA has external advice in place in case something goes very wrong." Sources said that the government was considering changes to the regulatory regime that would be implemented if the stability of the insurance sector was threatened by falls in the price of equities and corporate bonds. Although the government is still some way from intervening, sources said that the FSA and others were monitoring the fast-moving situation very closely. In the United States, property casualty insurers Travelers and Chubb said that they do not need federal financial assistance and chided other insurers pushing to be included in the $700 billion U.S. Treasury bailout. According to a Chubb spokesman, Mark Greenberg, most companies in the property and casualty industry are in a strong position. He said that the intention of the bailout was to spend, quote, taxpayer dollars where there is a risk of failures. Among insurers, there has been one high-profile near collapse, of course, that's AIG, and that was after mortgage-related losses on credit default swaps left the company in a severe cash crunch. But so far, few others in the industry have come close to needing Chapter 11 protection because of bets on the U.S. housing market. Chubb and Travelers each sent letters of protest to Treasury Secretary Paulson yesterday, adding their voices to a growing debate over whether insurers should be extended the federal aid. Spokesman Greenberg at Travelers said, "We are vehemently against the application of the bailout to the P&C industry." On Monday, the American Insurance Association said most of its members do not support inclusion of property casualty insurers in the Treasury Capital Purchase Program either. The Treasury, of course, is studying how it could give relief to insurance companies under a proposed financial services rescue. While P&C insurers have largely responded with a, quote, "thanks but no thanks," life insurers and bond insurers are pushing to be included in the bailout. Travelers CEO Jay Fishman said the federal aid should not be extended to insurers, including those in the life sector, but should be preserved for more acute circumstances. Chubb also wants the broader insurance industry precluded from Treasury's capital program, saying it would give those who participated access to, quote, "cheap capital. It really isn't fair. It should be given to those getting the bailout. It would be giving those getting the bailout an unfair advantage." There's a story in this morning's Bermuda Gazette down in Hamilton, which is actually of some interest. Yesterday we reported that AXIS came out with some numbers. Today's story says that AXIS CEO John Charman said in a conference call yesterday that the insurance and reinsurance market faced a better market opportunity now than after the September 11th terrorist attacks. He said the erosion of capacity due to widespread catastrophe and investment losses in the third quarter, as well as the demise of AIG, created a near certainty of higher rates in 2009. Bullish about the industry's prospects going into next year, Charman said, quote, "I believe this is a much broader and more sustainable opportunity than 9/11. AXIS was one of the wave of insurers founded in Bermuda to fill the gap in insurance capacity created by 9/11. Charman said that Hurricane Ike, had the potential to prove to be the third largest hurricane in history in terms of insured losses. He said that the third quarter cats, as well as the damage to capacity meted out by the turmoil in financial markets, had acted, quote, as a catalyst for an across-the-board hardening throughout the P&C marketplace. He went on to say that the problems of AIG would have a massive impact on the industry and would further improve AXIS's prospects.